So over 90% of people who attempt to actively trade financial markets fail to make money in the long run. And in this video, I'm going to show you the one thing that separates people who actually make money in the markets from those who don't. And it's incredibly simple, yet most people fail to implement it. And it's the same approach that I use to get results like this, and this. So there's one concept that separates professional traders from everyone else. It's not win rate, it's not indicators, and it's not some secret entry signal that no one else knows about. It's something most traders have never actually sat down and thought about, and it's the reason why some strategies survive market chaos while others just blow up overnight. And that concept is called Skew. Understanding this and using it to my advantage is the reason I've been able to achieve results, and is one of the key components to the trading systems that we have on my algo trading platform called Algo Exchange. Those systems are running over $70 million of live capital across different automated trading strategies. So if you've ever had a strategy that looked great on paper, that felt smooth for a while, but then suddenly just erased a ton of profits in a single day, then this is the video that you've been missing. Because once you understand Skew, you'll finally see why it happens and how professionals flip that equation in their favor. And by the end of this video, you'll know exactly what Skew means, you'll understand why the best trading systems lose more often than they win, and you'll see why that's actually the key to long-term consistent profits. And at the end, if you want to take this one step further, I'll show you how you can access the same positive Skew strategies that I personally trade that are fully automated and currently running over $70 million of live investor capital. So let's start simple. What exactly is Skew? Skew is the shape of your profit and loss distribution curve over time. It's not about how many trades you win or lose. It's about how big your winners and losers are. And there are two different kinds of skew, positive and negative. Positive skew means you have lots of small losses and an occasional large win. Think trend following, momentum, those types of systems. They take little hits while waiting for that one big move that makes back all the small losses plus more. Then there's negative skew. Negative skew is the opposite. Lots of small wins and occasional massive losses. And that's what you see in mean reversion strategies or in sketchy martingale or grid strategies in the algo world. And it's something that a lot of manual traders naturally do from poor trade management regardless of their entry criteria. Now, here's the rule that successful traders live by. How much you win matters far more than how often you win. That's the heart of positive skew. A positive skew strategy might be wrong 7 times in a row, but that 8th trade, the big one, can make up for every single small loss and still leave you in profit. It's uncomfortable, it can be emotionally difficult, and it's definitely not sexy, but it works because the math is on your side. Most retail traders fall into the opposite pattern, negative skew. They want to be right all the time, they take small profits quickly because it feels good to lock them in, and they hold on to losers hoping that they'll come back because they simply just can't stand being wrong. So they end up with a system that wins 80% of the time, but one market event, one spike in volatility, one bad day, and poof, all that progress is gone in an hour or a day. It feels comfortable until it isn't, and that's why so many grid, martingale, and averaging down systems look great for a while and then just completely blow up. They were designed to look smooth. They weren't designed to survive in the long run, and smoothness is fragile. So if you've ever had that gut punch moment where your equity curve just goes straight down after weeks of progress and wins, then you were trading negative skew. So the mental model here is this. Stop trying to be right often and start trying to be rewarded massively when you are. Paul Tudor Jones is one of the most successful hedge fund managers in history, and he summed it up perfectly. 5 to 1 means I'm risking $1 to make 5. I could be wrong 80% of the time and still not lose. And that's the entire philosophy. He doesn't chase high win rates. He chases great risk to reward ratios. So if he risks $1 to make 5, he could be wrong 4 times in a row, win once, and still come out ahead. That's positive skew in action. It's asymmetric reward. It's patience and control over ego and emotion. So how do you actually build or recognize a positive skew strategy? Well, here's a simple 3-step framework that we use with every single trading system. Step 1, keep losses small and consistent. There's no doubling down on losers, no just one more try. Every loss is a data point, not a dramatic failure. Step 2, let your winners run and add to them. Don't cut a good trade too early. Positive skew only works if the big moves have room to unfold. And step 3, focus on risk to reward, not win rate. Look for setups that offer at least 3 to 1, ideally 5 to 1 or more. That means that you can lose several times and still grow. If you follow those steps, something very interesting is going to happen. Your equity curve is going to start to rise, even though your win rate might actually start to drop, because your average winner is doing the heavy lifting for you. And that's when trading starts to feel stable again. So let's put this into numbers so you can really see how skew affects results. Trader A wins 80% of the time. He makes $100 when he's right and loses $800 when he's wrong. Over 10 trades, that's 8 winners for positive $800, 2 losers for negative $1,600. The net result is a loss of $800. Trader B only wins 30% of the time, but he makes $1,000 when he's right and loses $300 when he's wrong. Over 10 trades, that's 3 winners for plus $3,000, 7 losers for negative $2,100. The net result is plus $900. Trader B loses more often but still makes money because the winners are much larger than the losers. And that's positive skew in action. It looks uncomfortable in the short term, but is far safer in the long run. Now, here's some examples of positive skew systems that we have on Algo Exchange. Let's go ahead, hop over to the platform. These are the systems that I use to run my capital, and cumulatively across the platform, there's over $70 million of client funds running across the various systems. All right, so if we take a look at this strategy here, this is on my platform, Algo Exchange. This strategy is called Cairo, and this is a positive skew strategy live in real time, right? This system is up 45.1% year to date. It has not even traded a full year yet. The max drawdown is 9.2%, and you'll see here it only wins 32.1% of the time and has a profit factor of 2.1, which is a really sufficient profit factor. 45.1% is a bit over 3 times the current S&P 500 gain, and you can see here it's very, very consistent. And if we look at the equity curve, you'll see positive skew in effect right here. And we'll take a look at a lot of the metrics here. This system is running just under $10 million of live capital at the moment. We'll take a look at the exact number, but everything we're looking at here is not a back test, or this system is actually putting on real trades in the market and is doing very, very well. So this is a prime example of positive skew in action. First, we'll take a look at the equity curve. We'll look at the trade record and the stats behind it. But you can see we have some larger winners here, some smaller losers, large winners, small losers, large winners, small losers, and a bunch of small losers right here. So this whole period from here to here is all small losers, but it doesn't really hurt the strategy too much. Then we start having bigger winners, big winners, and then we just keep hitting these bigger winners and smaller losers. And you'll see that reflected by having these pops and then these little declines in the equity curve. Pop, pop, little decline, pop, okay? And that's positive skew in action. So here you can see on the trade record, the wins, $4,200, the losers, $579, roughly $3,700, $600, $1,000, $44, $500. This is a bigger loss for the system, the $2,400 one. That's actually going to be one of the risk management controls in place there. That's when a trade really doesn't go its way, most likely from a news event. We are really maintaining a very healthy balance of small winners, small losses, and large winners, right? There's really not a lot of small or not a lot of big losers with this particular system. If we go back a bit more, you could see that in action here. Small losers and then big winners, bigger winners, big winners, right? So this one trade right here, this $5,400 gain, washes out all of the losers on this page. And that is how positive skew works. So the key to success here is participating when edge is present. You cut your losers quickly and you maximize on the winning opportunities. It doesn't matter if you're trading long or short, this still applies. So let me give you a quick warning. Positive skew systems demand patience. They are not for people who need to win every single day. If seeing a few small losses in a row throws you off emotionally, this style is going to be a challenge for you at first. But remember, the small losses are going to be the cost of admission for the next big move. When it comes, it makes back all those small losses and more. So let's recap this in about 30 seconds. Positive skew means small, frequent losses and occasional massive wins. It's healthy, robust, and sustainable in the long run. Negative skew means frequent small wins and occasional devastating losses. It feels good short term, but is really fragile in the long term. And lastly is that win rate is a vanity metric. You could still be incredibly successful with a low win rate so long as you are rewarded massively when you win. If this video helped shift your perspective on what actually drives consistent performance in trading, subscribe to the channel. I post deep dives on how systematic trading really works behind the scenes. I go over some of my own results and more. And if you'd like to take this a step further to get access and use the same exact positive skew systems that I personally trade that run automatically and are managing nearly $70 million of live capital right now on Algo Exchange, then click the link below and we'll see if it's a fit. You'll get to see the concept in action and how the strategies protect capital while capturing those asymmetric opportunities that most traders completely miss. Because at the end of the day, it's not about being right often. It's about being rewarded massively when you are. See you guys in the next video.